Hey everyone, this is your weekly market outlook for the 24th to the 28th of July 2023, the last full week of July. So let's take a quick recap of what's going on last week. Pretty quiet week. We don't have much really in terms of what's going on last week. I think it's more on it's the speculations that's going on in the market last week in terms of what the Bank of Japan is going to be doing, what the FOMC is going to be doing this week. So I think we're looking at a pretty quiet week last week, a little bit of a correction in the market, but that's pretty much it. We don't really have much coming out from last week except for the UK CPI number, which comes in a little bit softer than what the market is expecting, but that's pretty much it. This week, it's probably going to be a little bit more jam-packed. We've got the French, German, Euro, CPI, manufacturing and services PMI. We've got the UK manufacturing PMI and the US as well for the flash manufacturing PMI, not the ISM. We've got Australian inflation numbers coming out on Wednesday. And then we've got the FOMC statement as well as the interest rate decision, which we are expecting a 25 basis points hike. But that's pretty much it. Coming up from the Euro side, we are also expecting a 25 basis points points up. But I think the main event this week is actually not going to be the FOMC or the ECB. I think the main event is actually going to be the Bank of Japan. So there's been a lot of speculation. That's why we've been focusing on the yen crosses this month. There's been a lot of speculation that the Bank of Japan is going to start tweaking their YCC or the yield control curve. That kind of changed last week with the inflation number. There's a little bit of an estimate that the inflation might have peaked a little bit in terms of the wage increases in Japan. It's not really consistent as of yet to change the monetary policy at this point in time. So that's basically coming out from the Bank of Japan. We've got several comments coming out from the Bank of Japan. Although we've got a little bit of a different talk coming out from the Ministry of Finance in Japan. I think there's talk about the drop last week in terms of the Japanese yen itself. We've got the Japanese yen strengthening for the month of July, and then there was a sudden drop last week with people dropping off the thoughts that the YCC is likely going to get tweaked. So there's a little bit of a verbal intervention, but it doesn't amount to much at this point in time. So I think it kind of weighs in a lot this week in terms of whether or not the Bank of Japan is actually going to tweak the YCC. So there is still going to be risk, but I think the risk right now has kind of been subdued a little bit, that people are thinking, the Bank of Japan might not actually tweak anything this month, so they're putting it to September, October before any tweaks is likely going to happen. So that's pretty much it. We've got a full central bank week. We've got the FOMC, we've got the ECB, we've got the Bank of Japan, but I think the main event is actually going to be the Bank of Japan. I think this is actually going to be the biggest movement in the market. It's likely going to be with the Japanese yen crosses. All right, so let's take a look at the dollar index here. We mentioned that this is due for a little bit of a technical correction. We posted several videos as well in terms of the dollar index as well as the Japanese yen index. We expect that correction to play out, and that's basically what happens. Last week we saw that correction. We saw the dollar index bounces back up. Right now it is roughly about the 101 level, way off from where it was last week, below the 100 level. So I think this is currently within that correctional phase. We're expecting to see a little bit of a push higher towards 102, potentially towards 102.50 in terms of the correction for the dollar index. Beyond 102.50, that would transition even higher, but at this point in time we still treat it as a little bit of technical correction in the short term. So long term, the US dollar might still be a little bit weaker, but in terms of the short term movement in the market, we do expect a little bit of a recovery on the US dollar itself, and that's reflected on what we view our view in the market last week. We've got the Aussie USD. We anticipate a little bit of a drop lower below 68 cents. We saw that happen. Right now we're still tracking this progress towards 67. That would be the immediate support. That's kind of significant for the Aussie USD. Below that 67 cents, we still have 66 cents. Right now, this is still categorized as a technical correction. We're looking at about 50%, 61.8% at this point in time, to about 67 cents for the Aussie USD. The Euro USD, with the movement and rejection last week, we can kind of confirm that it got rejected at 127.2. But if we take a look at the price movement here, this is slightly interesting because we saw that drop on the Euro USD. It is actually not that significant, and we're still trading above that 1.1 level. And 1.1 level at this point in time is still about 100% on the Fibonacci retracement until We saw that break below 1.1 level. We're not really tracking any movement higher on the Euro USD or any movement lower on the downside for the Euro USD. I think this one here has a little bit more room to go to the downside. If we do lose that support at 1.1, we anticipate that pullback to continue towards 1.11. If we lose that 1.11 level, then we anticipate that pullback towards 1.10. That would kind of play out, coincide with the support too on the weekly pivot for this week as well. Momentum wise, there's still a lot of room to go for the Euro USD. Pound USD, this one is on track. We were looking at a little bit of a short trade on the pound USD last week. We anticipate that push lower below 1.3 to continue towards 1.2850 and potentially 1.28. Right now, that 1.2850 has been reached, and we're anticipating to see if that 1.28 level is actually going to hold out at this point in time. So yeah, we're still looking at that push lower towards that 61.8%. I think we're still looking at 1.28 to be able to support the pound USD. Whether or not there's going to be buyers around 1.28, that's going to be crucial for the pound USD this week as well. So, but until that happens, until we see that bounce coming out from the 1.28, it's really hard to tell if the pound USD is still going to continue or is it still going to correct even lower. If the scenario where we actually lose 1.28 happens, then we are looking for that move towards 1.27, potentially towards 1.2650 as well. Overall, it's still going to be above the Ichimoku cloud, so there's no long-term shift in terms of the trend for the pound USD at this point in time. This one here is still a technical correction. Now moving on to the dollar Japanese yen, we always mention that the dollar Japanese yen is still technically in an uptrend. We were looking at a little bit of a bounce happening. We were looking for that for the past 2 weeks. We saw that happen. We have that bounce of 138 last week, and that still plays out. And if we take a look at what's going on here, we have seen a significant push higher on the dollar Japanese yen. Again, there's still a lot of room to go for the dollar Japanese yen. I think we're still looking for that correction back towards 145, and kind of coincides with where the resistance 2 on the weekly pivot is located as well. So dollar Japanese yen, I think if we take a look at where it is right now, we're trading above the weekly pivot. We're still on track towards that move higher towards 144, 145. Once it surpasses 142, I think there's still going to be a lot more room to go for the dollar Japanese yen. If you take a look at the stochastics here, just turn around here, kind of matches the speed of the recovery on the dollar Japanese yen. Again, things could change if the Bank of Japan tweaks the YCC this Friday. If that happens, then I think we're going to see a huge drop in the dollar Japanese yen if there's that YCC tweak. If there isn't any YCC tweak, then we expect the dollar Japanese yen to just shoot up really quickly to the upside and potentially even surpassing 145 if the Bank of Japan comes out and say, look, we're not going to be changing anything. We're going to keep our ultra easy monetary policy going on for the next few months. But there's a but. The inflation projection is likely going to get revised. So I think the Bank of Japan is probably going to say that, yeah, we expect the inflation to go up a little bit higher, but we're still not going to be doing anything about the monetary policy. I think if that happens and there's no tweak to the YCC, it should be a boost to the dollar. I think that's going to pressure the Japanese yen a lot significantly. Now, keep in mind with the dollar Japanese yen, this is kind of the benchmark for all the yen crosses as well. So the Euro yen, Sterling yen, Aussie yen, Swiss yen, Canadian yen are all still positively correlated to the dollar Japanese yen. So if there's any significant move in the dollar Japanese yen in whichever direction, then it's likely going to impact all the other yen crosses as well. All right, so with that, good luck with your trades. Don't forget, we've got the FOMC, ECB, the Bank of Japan. So the month of July is probably going to go out with a huge bang. So good luck with your trades. I'll see you soon.